Hey, Carl, yes, indeed. As you said, the president and the vice president and the Treasury Secretary currently hosting in the White House behind me the leaders of the major financial institutions of this country. In attendance, we have the leaders of JP Morgan, Bank of America, Citigroup, Goldman Sachs, Wells Fargo, Truist, US Bancorp, Blackstone and Citadel, making it, of course, the type of gathering that we haven't seen since the peak of the financial crisis. They're all inside as we speak. What will be on the agenda? Well, two main things. Number one, liquidity and the functioning of markets. Number two, lending to businesses that are most affected by the coronavirus. Whether, of course, we see any hard policies that drastically change the equation or just a photo op remains to be seen. Now, most of the CEOs were tight-lipped as they went into the White House moments ago, though I did manage to stop the chairman and CEO of Bank of America, Brian Moynihan. I asked him whether he now expects a recession in the United States.
We're here to have a good meeting with the president. My colleagues and I have great companies, are well capitalized and doing what we can to support the American economy and the consumers and companies. And we're here to help the president support the economy.
People have compared this to the financial crisis. Is that a legitimate comparison?
I think the banks are very strong, and so let us go have our meeting.
Now, of course, whether or not we see any sharp policies that change the lending environment to smaller business remains to be seen. But this is also the first time we've heard from these bank CEOs since the sell-off in broader markets and in their stock prices in particular begun. The KBW Banks Index down close to 40% since its January peak, around 37%, I think, with today's moves. So we'll also be listening out to any comments from these bank CEOs to say that their companies remain strong. Guys?
So, I mean, Wilfred, to your point about the banking stocks, we're down 5.5% for banks right now. The 1 month performance, just ugly, down 26%. I mean, how negative do you think they're going to be about what's happening in the markets and with their stock prices?
Well, it's a great question, Sarah, and really genuinely and very eagerly anticipating anything they have to say. On the share price move, I'd say two things. Clearly, the broad reason in which they have sold off so sharply over the last couple of months have been that yields have collapsed. As we well know, their earnings are closely linked to yields. Interestingly, they did enjoy a healthy bounce yesterday. For the first time, a bounce that was larger than the broader market rally. Though today, you may have expected them to hold up a bit better than they have done so. Why? Because yields have held up today, but that is not the case. And again, it just shows that broad risk-off sentiment that we see in markets that banks are always a big part of, not least when you have questions about the viability and future of companies, whether it's small and medium-sized businesses exposed to the virus or larger energy companies exposed to the oil price sell-off. And we will be waiting any comments that they can give to reassure the market that their balance sheets are strong, that their futures are certain, and maybe they can deliver a bit of a rally to their share prices today.